So chapter 8, part D, question number 13, and I'm going to ask you right away, which one of the following transaction does not affect the amount of owner's equity? So highlight not, highlight owner's equity. Owner's equity mean auqat, net worth, right? Number one, investment by owner. Number two, personal withdrawals from the business. Number three, net income earned. Number four, purchase of assets by the business. Right? So which one should be? It's number four. You'll say four, but you just crammed it. You don't know why, right? If it's a number one, an investment by owner, it means if my net worth is $200,000, if I take the money out, invest somewhere, is going to affect my equity, right? My equity is going to go down, right? You understand?
Yeah.
Then personal withdrawal from the business. If I take the money from my helping hand, it will increase my equity. Personal, right? Third, net income earned. If I make any income from any source, it is going to increase my equity. But they are asking which of the following does not affect, right? So the purchase of assets by the business. If helping hands buy any asset, it does not affect my personal. It only affects the business. And this is a very tricky question. Okay? So it's number 4. And then we go to the question number 14, I think, right?
Number 4 is the answer?
Yeah. Number 14, which of the following is a liability on a financial statement? Liability means payable. So depreciation expense, accumulated depreciation, salary is payable. What do you think? Salary is a payable. Anything payable is a liability, which is a current liability, right? So it's third. So then we go to the question number 17, I think.
16.
Yeah, 16. So you can read this statement, max grocery as at March 31st. So this seems a balance sheet, right? And Max Smith bought the land and building shown on the preceding statement exactly 3 years prior to the statement's date. So highlight 3 years. Each year he claimed 5% depreciation expense. What was the purchase price of the land? So highlight purchase price of the land. How much did he pay for land? If you go on the asset side, say land 180, right? So does land depreciate?
No.
Yeah.
No.
Land doesn't depreciate. So what's the price he paid? 180. So what are you going to write on the balance sheet? What you paid for it, not what they ask, what you paid for it. So it's number 2. So land never depreciate. And then we go to the question number 17. Given Mac's financial statement, determine the market value of his grocery store. Highlight market value. So market value is based on so many factors. In this statement, it has only the current assets and current liabilities and equities, but doesn't tell the location, doesn't tell the income expense, right? So basically you can't determine. So it's number 4, impossible to calculate. And then we go to the question number 18. Which one of the following will not be found on the balance sheet of a corporation? So highlight not. Number of share issued. So did you see on that statement?
No.
Number of shares issued. It was common share 100,000. Remember? Original cost of the property owned by corporation. What you paid originally. So you see at cost. Names of corporation shareholders. So did you see the name of corporation?
No.
Did you see Harpit and JB there? No. At the retained earning, did you see there? Yes. So is number 3. Names of the corporation's owner, a shareholder, you don't see. And then from there we go to the question number 19. Which one of the following best describe shareholders' equity? Number one, share capital. Share capital means, if you look up, investment made by all the owners or the shareholders of company. Share capital means whatever money you share, right? If I buy this gas station, I put $500,000. Suk put $500,000. It means we investing, $1 million together. So we are sharing the capital together. That means share capital. Then is a plus retained earning. Retained earning I told you already. Retained earning means whatever is retained in the companies minus losses minus dividend, right? Since corporations incorporation. So the number one is the answer, but I'm telling you the meaning which you already know on question. So the question number 22, right? So it's number one. It's a very important question. And then we go to the question number 20. We did already. Go to 21.
Question number 19 answer is?
Number one. We go to question number 21. Current assets on the financial statement of business include, number one, the owner's initial investment. No. Rents payable. Yeah, rents payable is a current liability. Real property at its historic cost, what you paid for it, is a current. No. So none of the above. So give me the example of one asset. Tell me. One current asset. Cash in the bank. Inventory. Right? Rent receivable. Account receivables. Right? So that's it for this part.